Good afternoon, ladies and gentlemen, and welcome to the presentation on the acquisition of the Albion Drilling Group. In today's presentation, Mark and Graham will add a little more colour to the acquisition, after which we can take some questions. Please do use the Q&A tab situated on the right-hand corner of your screen, or if anyone has dialed in via vanel@walbrookpr.com. To remind you, this presentation is being recorded. I would now like to hand you over to Chief Executive Mark Cutler and Chief Financial Officer Graham Campbell. Gentlemen.
Thanks, Tom. Hi, everyone. Yes, so as Tom mentioned, just an opportunity to add a bit more detail and some of our thinking behind the Albion acquisition that we announced earlier this week. This was a target that we've been considering since midsummer, and at the time of the results in late July, it was at a reasonably advanced stage, albeit we couldn't, of course, give any insight as to what we were doing. It was very much on strategy in relation to what we presented at our results, and perhaps we thought it would be a good opportunity to explain in a bit more detail how it fits and what that strategy is. So Albion is a small company, but is a leading business in terms of some of the specialist piling techniques in Scotland. And we've known of them for some time. In fact, we employ one or two ex-Albion people, and they're very well regarded. And they specialise in things that we're very familiar with, but bring a Scottish presence in infrastructure and some of this specialist piling work that we simply don't have. We do have a Scottish business, but it concentrates on housing primarily, and we're underrepresented in infrastructure in Scotland because we're always visiting and never really permanently there with customer relationships like we do have in the rest of the UK. Albion itself is based in Stirling, good central location as far as we're concerned. We have a depot in Blantyre, not that far away, but it's a good opportunity to bring our resources together. And as I say, a very strong track record in complex infrastructure, particularly energy. And really that's the backbone of our thinking behind this, is the growth in the energy sector, which starts in Scotland and will come down the East Coast, and we'll come on to reminding on some of that in a minute. To make the most of this opportunity, we feel it's very, very important to have a permanent Scottish presence fronted by recognisable leadership team in Scotland. And the capability that Albion bring fits perfectly. They also bring some new skills that we don't have, including blasting, which might sound a bit of a diversion from geotechnical engineering, but actually it's not. It's often hand in hand on some big infrastructure schemes where there's rock involved in terms of the way the schemes are carved out of the landscape, or the aggregates are secured and won for the project. And that's a niche area that fits very well with what we feel we're going to be doing on some of these big projects in Scotland in particular. So the rationale is to fit very much into our energy growth strategy, followed not far behind by water, which is also a strong investment line in Scotland. The projects that Albion have done help us to strengthen the bid proposals that we'll make. We can resource them more easily, and they bring new customers that we don't have for some of the transmission lines that we're already aware of, and perhaps wouldn't have the same existing track record of customer relationship. So it expands our customer base. It extends our capability in terms of some of the blasting activities I mentioned. We've got a rig fleet which we've examined closely, is very high quality. We're very happy with it, and as Graham explained, the deal is very much asset value, and a high quality workforce as well, directly employed, very similar model to ourselves, and a leadership team, in particular the MD Jim King, who is critical to this, fits very well for our requirement for a Scottish leader to lead our growth in the sectors I've mentioned over the next 3 years or so. And here we're looking at growing, as a reminder, we're looking at growing from, if we take Albion as a starting point, plus our visiting projects, we might be doing 6, 8, million a year at the moment in Scotland. We see that growing to 30 to 40 million a year within 3 years, with the opportunities that we've got, all very much within our specialist piling, high margin area. So we really do feel we need to make the most of that with a local presence. Do you want to just touch on some of the financial aspects, Graham, as well?
Yeah, I mean, I think there are a number of factors here. Next slide, I'll touch on the consideration for the deal, but historically the business has performed successfully, certainly over the last 3 to 4 years post-pandemic. As many in our industry had a couple of challenging years during the pandemic, but have responded strongly. The last reported financial period was the year to the 31st of January 24. They delivered 5.5 million of revenue and EBITDA over £1 million. So stable, solid performance, low debt, as you would expect from a small private business. In terms of looking forward, I mean, we expect them to be able to firstly continue to deliver as they've done so in the last 3 years, perform successfully. We've got a great opportunity up in Scotland that Mark's just described. And hopefully we expect to see some modest synergies. Now, we're not overcommitting to the synergies, but for example, combining some of the leadership team, combining our insurance programs, and potentially leveraging some of our systems, we should see some modest benefits, which should help us to grow that bottom line from where we are. In terms of the deal structure itself, the balance sheet that we looked at and that we have acquired is approximately 3.5 million of net assets, of which approximately 500,000 is a net cash position. So effectively, we are paying cash for cash. So in our 3.5 million of offer, you could say on a cash-free, debt-free basis, we've effectively paid £3 million for the transaction. What we've done internally is to take a look right down the balance sheet, as you would expect. And one of the key factors, of course, asset-backed business, very much like ourselves, is to take a very close look at their assets. And really, they're twofold. They are a freehold property based up in Stirling, which the team operate out of, and there are a number of rigs that obviously our internal operational teams are very familiar with. So we valued those at what we consider to be a market value. We've compared that to what Albion felt they were worth as market value, and we've come up with broadly the same answer, which is that the 3 million that we've paid is broadly, it's fully supported actually by the market value of the kit. So I think when you look at the deal structure itself, our view is that one, it's fully backed by a fair valuation of the assets, but it's also on a reasonably attractive multiple when you look at their EBITDA performance over the last couple of years. The deal itself, we structured it with 2.1 million of cash up front and a share capital issue, which we felt as a board was a modest dilution for the benefits that would bring. So 1.4% dilution on our total share capital at an average of the previous 30 days price. And I think one of the key factors here is it is absolutely vital that we maintain that Scottish presence and we keep the leadership team for a period of time. And we've got that with the share capital issue. So that is effectively a 12-month holding period with a 12-month orderly exit on top of that. So that sort of aligns the strategy that we've got for our Scottish business with the leadership of Albion going forward. There is a deferred consideration element, and again, we've, as we have done with previous transactions, we've tried to defer the cash element and negotiated a deferral, and some of that release is 6 months, 12 months, and then 24 months, and that's just purely cash management from our side. And the final bullet point on the deal structure slide is key, which is that the Albion MD, who's led the business, will stay on for a period of 3 years to help us drive this forward.
Thank you. And a quick reminder of why we're doing all of this in terms of big picture strategy. So you might remember, some of you, this slide from our results presentation in late July. The growth strategy in energy in particular, and this is before, I'm not going to go through all the other sectors, but other growth areas in Scotland that we're very familiar with around highways, railways, and water in particular, and quite a lot of marine activity actually. But if we just take energy, which is the dominant consideration here for us in our thinking, and Albion have done transmission lines in Scotland going back several years now, schemes we're very familiar with, and with customers that we expect to be rolling forward with. This fits brilliantly, and you can see the concentration of infrastructure around the energy sector that is focused on Scotland, then comes down the east coast of England and into East Anglia and the like, as you move from SSE and Scottish Power and down into National Grid territory. That sort of rolls along over the next 3, 5, 7 years, but will start in earnest very much in 2025. We have been busy finalising frameworks with some of our key customers. The Albion deal opens up one other very, very large market-leading Tier 1 contractor that I'm not going to necessarily name on this call. We're in negotiations that Rationale were not so well positioned as Albion are, and we have 2 schemes on site already in Scotland now, and we expect to be starting more in early 2025. In partnership with Albion, even during the period of the acquisition, we came together to jointly bid a major ground investigation scheme that we would not have been able to bid on our own. This with our Strata Geotechnics team, with resources from Albion blended in and fronted by Jim King, our MD, in terms of relationships. So we knew very early on this was going to open up more doors than it might look like just on a financial appraisal, and that does appear to be the case in terms of customer reaction so far. So we're going into 2025, and for us FY26, soon after, with a lot more confidence or ability to access more than our normal market share of the opportunities in Scotland, which will dominate, a big part of our strategy for the next 3 years or so. And then, as I say, we'll continue further as we go down into the northern England. Okay, that's it. You'll be pleased to hear not too many slides. We're very excited about the whole thing. I think it's a brilliant fit. We've got good reaction so far from customers and from the wider industry. So we're happy to take any questions.
Super. All right. Well, thank you, Mark. Thank you, Graham. Just looking at the questions, please do continue to submit questions using the Q&A tab. First question from John. Are there any potential long tail liabilities from Albion's past contracts on some highly technically demanding projects?
Well, that's been one of our topics during due diligence, as you might expect. We've had quite a sizable team on due diligence, on commercial and legal aspects. We're very familiar with what Albion do. The only thing that Albion do that we don't do is the blasting that I mentioned, but that is not permanent work. That's creating what's called temporary work, so there are no liabilities associated with that. The other stuff, very familiar to us, nothing out of the ordinary at all, not identified any long tail or even short tail liabilities from the work they've done. They appear to be very, very capable and highly regarded, technically adept. So no issues come to our attention whatsoever.
Probably worth also saying that we've cast our eye over the insurance program that they've had in place. So a robust program of insurance broadly similar to what we've got here. We've made sure that was comparable to the risks. We'll also run Albion as a subsidiary company for the foreseeable future, and that's a ring fences any potential risk. But they have, as Mark said, a very strong track record, and certainly in recent years, no notifications of material problems or claims.
Great, super.
A very good safety record as well, which is pleasing. So yeah, very, very few issues came up in due diligence. And of course, when we did the DD, we learned from the previous 2 acquisitions that we've done in terms of looking in more detail at certain areas. So we're we're getting a little bit more experience ourselves as well in terms of some of the areas to look at. So we got through the whole process very smoothly. Actually, we're very pleased.
Yeah, super great. All right, well, slightly offbeat, but Ben says, any comments or thoughts on yesterday's budget?
Wow.
Well, I think I would make two quick observations. We're still obviously assessing the impact and the financial impact of businesses. It clearly wasn't a budget that's favourable to small, medium-sized businesses, and so I think there's a positive there, which is one, the impact on AIM was probably not as great as it could have been. So the IHT relief, IHT fund relief was not sort of dealt with as strongly as it may have been. So we're reasonably pleased. The AIM market seems to have been pretty stable. But of course, we've got a challenge on wages with national insurance, which everyone will be wrestling with, which is, obviously there's the 1.2% increase as well as the reduction in the threshold when it kicks in. So we've got to put some serious thought into that over the next few months before it kicks in.
On the positive side, transparent route upgrade looks like it's going to be backed, but has been backed. We're expecting that the sort of stuff we've just been talking about is full steam ahead. We're also waiting, of course, for final regulatory decisions on the AMP8 water programs. But the spend, at least that we're all hoping for in infrastructure and housing, looks like we can plan on that basis. That's great. So we'll have to mitigate the cost impacts, and of course we'll have to pass some of it on. But at least the tailwinds from the markets that we've been talking about look like they should be available to us.
Great. Yeah, and as many investors will be on this call, they will have witnessed yesterday the positive reaction by stock market and shares when the moderate tax changes were announced. Mark has just asked, and you have touched on this, I don't know whether there's any more you can add, but what is the condition of the Albion fleet? What is average age and reinvestment need? I don't know if there's anything more. I know you have touched on it.
Yeah, we're pretty happy with it. It's younger on average than our existing similar rigs, well maintained, good yard facility, good workshops, good fitters, good operators. Very happy with it. No problem at all. Not expecting major reinvestment needs. We will be growing the fleet because we see so much more work ahead of us over the next few years, and this is a great sort of baseline to move on from.
And what Albion have done as well is to invest in recent times, having seen the market coming, particularly in the energy sector. They've reinvested in a number of rigs, so we will inherit a small amount of hire purchase, but along with that comes in particular for relatively new rigs. So they've seen the market coming, they've invested up front, and we're obviously inheriting that position. So I don't think there'll be any great need to sort of immediately replenish the fleet. I think the combination of Rationale plus of our existing fleet plus Albion's fleet will work very well together.
Yeah, great. Okay. Question from Bruno, also slightly offbeat, but I guess we should see if we can address it. Are you seeing a pickup in work related to house building and commercial building in the UK?
House building, yes, we are, and we put an update around that a couple of months ago, which was well received, and that momentum has not reduced. So yes, we're pleased with the pace of recovery that we're seeing in house building. Not seeing so much in commercial building and the regional construction markets just yet, I have to say. It's worth noting that particularly in the major cities, there's an awful lot of construction pipeline delayed by the Building Safety Act and the approvals that need to go with that, which is a multi-gatewayed process post Grenfell to control the building standards. There's a lot held up in that, which is in the public domain. I think the government have made some updates on it. Need more resource in the planning stages, but that will come. And when it does come, I think we're going to see a rush again of getting some of these taller buildings going. It's everything over 7 stories.
Great. Okay, super. All right. Well, look, that's very helpful and concludes the Q&A. Thank you, Mark. Thank you, Graham. Could I ask investors to close
this? One we missed, Tom, I think. Was there from Paul?
Yes. Did I hear you correctly when you said that you have sales in Scotland of 6 to 8 million currently, but anticipate 35 to 40 in a few years' time?
Yes. It's a simple answer. Yes, you did, Paul. You heard me correctly. Yeah.
Right. Okay. Could I ask investors not to close this session, as you will now be automatically redirected for the opportunity to provide your feedback. If anyone has further questions or would like additional information on Vanel, please do get in contact via vanel@walbrookpr.com. Many thanks for attending today's presentation.